message over the weekend was that the central bank does not want a one-way bet on the yuan climbing. They've made it more expensive, for example. They've changed the rule on those people who are trying to bet against the yuan's rise. So what they want to do now is to put a little bit of volatility in the market. Clearly that's what's happening. But at the same time, they don't want to trigger any panic. They don't want to signal that they want the yuan to weaken dramatically or anything like that. Remember, back in 2015, depending on your perspective, it was a botched devaluation or it was just a tweak of their exchange rate mechanism. But either way, it triggered all of that volatility. It triggered money to leave China. They don't want that signal to go out. They're just saying this is not a one-way bet. It's gone far enough for now. They just want to cool things a little bit.
And there is a worry in the United States that the recovery is already losing momentum. In Europe, you could make the argument it's already stalling. In China, the recovery continues. How much of their success, and economically speaking, is bleeding through to the rest of the region?
It's a great question. There's a view this time around that because China hasn't gone gangbusters on the stimulus, John, like they did after the global financial crisis, that it's not having the same spillover effect to the rest of the world. You look at the trade data with the US, for example. China's exports to the US are going gangbusters, but China isn't necessarily buying as much or nowhere near as much as was anticipated in that trade agreement, for example. And so there's a view that China's recovery this time around is more domestically driven, more home-based, and isn't having the same dividend for either regional or global growth that it has had in the past. We will get some more trade figures, by the way, on China tomorrow, and we'll get an update on how their export and import story is going. But regardless, we do know that the broad recovery in China is on track. It is somewhat steady and stable. We know that the manufacturing and export side of things came back on stream some months ago, and the consumer is now slowly coming back on stream. But I think the idea that China is pulling the world out of a hole in the way it did after the financial crisis isn't quite playing out the same way this time around.
And the current, if China's doing better, is Hong Kong doing better?
The slow signs, perhaps, Tom, that the economy is bottoming out here. Remember that politics remains tense. It's still, the borders here are still shut. The airport isn't really functioning like you would expect for a major financial hub. I think on the ground, perhaps the retailers are talking about some sentiment improving. Some of the COVID social distancing restrictions have been eased, but many still stay in place. For example, no more than 4 allowed at a table in a restaurant, for example. So the financial side of things here is holding up quite well. There's some big listings coming up on financial, potentially the world's biggest float is coming to Hong Kong soon. The trade story is holding up. Hong Kong is also a huge port, but it's the retail side of things that's still obviously quite slow. Tourism isn't there. People aren't spending like they were. And by the way, there is even chatter that today we're entering our 4th wave. So even though cases here are quite low, there's a concern that they will again take off as we head into the winter months. So I think for Hong Kong, like everywhere else, it's going to be a long winter.
And to stay well. Great to have you on the programme. Staying up later this evening. Bloomberg's Ender Curran there over in Hong Kong. Tom Keane, I think that's one of the interesting parts of this. Just compare what's happening in China now to, say, the United States and the rest of Europe. The confidence that investors have in a Chinese recovery, it's actually pretty phenomenal. But there's one extra element to the Chinese trade over the last couple of weeks, and that's the Biden trade. And it speaks to a former vice president that this market has apparently decided will be much softer on China relative to the current president of the United States, if indeed he is elected, Tom.
I don't know if it's so much a Biden theory or a Biden policy, if it's the market pricing in perhaps an end to the tensions that President Trump felt was so comfortable. I mean, it's interesting to see. I mean, you really wonder how that shift will occur, if it occurs, John.
And that's the perception, Lisa, the predictability of policy around a potential Biden government. It doesn't make his argument that he would be just as hard on the world's second largest economy that strong, does it, if this market has decided that he's going to be that much softer?
There are different theories, though, here. I mean, one of them is that President Biden, that former Vice President Biden, should he win, would be less hard on China. There's another theory that the more consistent the policy, the more confident people will be to actually do business, right? I mean, how do you even get business done in an environment of an incredible uncertainty and sort of arbitrary decision-making? And I think that is also something people talk about.
Policy predictability. Coming up on the programme, Vishy Thiruppatur, Morgan Stanley head of fixed income from London and New York. Good morning to you all on this Monday morning, with equity futures advancing 3 weeks tomorrow. An election just around the corner in the United States of America. This is Bloomberg Surveillance.
कोरोना फैला हुआ है चारों तरफ। इस कोरोना के दौर के अंदर ये प्रदूषण हमारे लिए जानलेवा हो सकता है। एंटी स्मॉग गन्स काफ़ी बड़े स्तर के ऊपर जगह जगह लगाई जा रही है ताकि इसको रोका जा सके, और भी बहुत सारे कदम उठाए जा रहे हैं एंटी डस्ट कैंपेन के तहत।
Time will never come back. That was indeed a heaven view. There was less pollution. But now festive season is coming closer day by day. And again there will be same pollution, same problem.
जब कोरोना नहीं था मैं तब भी मास्क यूज करती थी, आज भी यूज कर रही हूँ, तो मेरे लिए तो कोई भी चेंजेस नहीं हुए वहाँ।
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacqua.
We're still in the greatest economic shock in over 50 years.
There will be job losses in some sectors, but there'll be job gains in others.
Once the economy sort of really begins to get going again, I think we're going to be stunned by the degree of earnings upgrades.
The numbers this year don't really tell us as much as we need to know about the future.
The Fed has been flattening the curve when history says that what you want is a steeper curve.
One thing that I think almost everyone missed is that an economy adapts.
The market will hear what it wants to hear, and right now this market wants to go higher.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on Bloomberg Radio, Bloomberg Television across this nation and worldwide. What you need to know, moonshot. Let me get right to it. John Farrow, futures. Highs for the day, just printing 20. Dow futures up 200 points, up 19 points. NASDAQ futures, I'm getting carried away, John, up 1.7%. John, the Standard & Poor's 500 up 5.8% in the last 10 days. Is that a moonshot?
Biggest week of gains since July last week, Tom, and we had some weight to it this morning. I'll echo what Alarian said on Friday, which is this market is hearing what it wants to hear, and right now it wants to go higher. It's such a glass half full approach to the situation down in Washington. It's a matter of when, not if, and it doesn't matter when we get that fiscal stimulus, Tom. We will get that fiscal stimulus, seems to be the message from so many people we speak to.
Jonathan Farrow, 14 seconds into the program, already explaining some of his other properties to us here on our simulcast worldwide. Lisa Abramowitz, the political story really front and center. Do you link the political story, Lisa, right into what we see in market activity?
You certainly see that across Wall Street analyst reports, basically saying that Joe Biden solidifying his lead reduces the chance of a contested election. That lack of uncertainty is what is giving people confidence to go ahead and get long equities and sort of come up with this narrative, as John was saying, that there's going to be fiscal stimulus regardless of what happens, and cash trumps political uncertainty, a pandemic, and the worst recession since the Great Depression.
John, what's so interesting to me, and we wake up across America, focus 22 days out as well. John, I actually tried to read carefully on Liverpool, in Manchester, in Newcastle to the north, in the pandemic in your United Kingdom. It's about exploding cases, but very few deaths. John, what do you expect in the next 24 or 48 hours about the pandemic in the United Kingdom?
So 3:30 local, Tom, we'll have the Prime Minister address in the House of Commons. We'll then have a news conference at 6 p.m. local time here in the United Kingdom. There will be 3 tiers, medium, high, and very high. And at each tier, there'll be a separate set of restrictions and policies. Liverpool, the city that you first mentioned just then, a city in the northwest of the country,
It's in
Tom.
the northwest.
Population of about 500,000, and they've got a problem there, and you're going to see them potentially in the very high tier. I think the unanswered question going into this address from the Prime Minister today is where London fits into all of this. Is it medium or high, and what are the restrictions we could see around the capital? Look out for extending or introducing rather, that restriction around houses mixing, different houses mixing with each other.
Interesting.
That seems to be an approach that we might see come down to the capital. That's where the speculation is at the moment,
Right.
Tom.
John, very quickly here, you've been on top of the Heathrow to JFK debate, the transatlantic debate. I saw a little bit on that this weekend. Is there any chance that we see that from where you sit in London?
Looking for some news on it. Caught up with Guy Johnson in the last week. He follows this stuff much closer than I do. There's a task force. Finally, the UK is announcing a task force to try and get this done. Look, Tom, we already know that they can test for this pretty quickly now. We've got some high-speed tests that have been introduced by the likes of Abbott Labs in the United States and elsewhere here in Europe too. It's something that can be done. I just don't know why it hasn't been done quickly.
They can borrow a few members from the surveillance task force. John and I and Lisa are familiar with the surveillance simulcast task force. Let's get to the work at hand here. We're doing this on a day where bonds are closed, full faith and credit closed in America. Again, futures now up a solid 20 points. Dow futures up 29 points, a lesser percentage. Vishay Tirupatra joins us right now with Morgan Stanley, head of fixed income. It's a Morgan Stanley call that's nuanced and is wrapped around the politics. Vishay, how do you wrap the politics of the moment around total return or clipping coupons?
I think the way we have, and good morning to you all of you, and the way we think about this is in terms of the scenario analysis. We look at the potential for different outcomes for both the Senate, the House, and the White House, and increasingly you're looking. The market seems to be, I think, as Lisa mentioned, assigning a greater probability for 3 things. Greater probability for a Democratic White House, a greater probability for a Democratic sweep, including Senate and the House, and a greater probability for lower uncertainty of lower uncertainty of the electoral outcome. I think you put all these 3 things together, you think that the likelihood that we will get some form of stimulus, perhaps higher than what we have been discussing now. I think there is a greater probability that we will get some form of stimulus, not necessarily before the election, but after the election. I think that's where the market is really focused on in terms of a stimulus after the election. And that stimulus means, we think that means the long end of the Treasury curve would go higher. So 10 years to 30-year part of the curve would go higher. But on the other hand, for several risk assets, we think it's a constructive outcome.
Vishy, does this trade hinge on the Republicans losing the Senate?
I think it hinges on it doesn't entirely hinge on. Clearly, the prospects for this trade are greater with Republicans losing the Senate. But on the other hand, if a thinner margin would certainly move in that direction. That's how I would say it. I think a gridlock scenario in the long run is going to be problematic, clearly. We have seen that in 2011. But I think that the market's assessment that some form of fiscal stimulus is coming in bulk of the scenarios that we are looking at, I think it's a fair one. It's a question of how big the stimulus would be. But if you couple this with a potential for second wave and across the board, both the markets and the Fed policymakers calling for stimulus, I think unless we have a very different election than what the election outcome than what the markets are predicting at the moment, we think that the stimulus is going to happen.
And Vishy, people are taking this increasingly consensus view and going into risk, going into stocks, and going into riskier credit with spreads and high-yield bonds now the lowest since March 4th. Have we simply abolished the default cycle that a lot of people were expecting, or do we just delay it to another time that will rear its head in the not-so-distant future?
We're certainly not abolishing the default cycle by any stretch of imagination. In fact, what we expect is in the high-yield bond space, we expect defaults to be in the 7 to 9%, and that's something that we are very much on track to get into that level, where perhaps lower defaults are in the leveraged loan space. But clearly, defaults have been going up, and we don't expect that the default cycle will be dramatically different from what we had been expecting. But I think the markets are priced for it, and I think one thing important to keep in mind is we are in a different world now, where there is there is much more active involvement of the Fed in the credit markets. And that's a big difference between this cycle and all the previous cycles.
Not a single day of spread widening going back more than 2 weeks. Vishy, before we let you go, just a word on what's happening in Europe right now. I know a big trade Morgan Stanley's got on is to short treasuries and go long the continent. What's behind that move? Well, in Europe, I think we think that the market seems to be underpricing the probability that there will be a favorable outcome in the near term on Brexit. And we think that's a key view we have, and in the rest of the Europe, I think the economic data have not been that impressive. And so if you look at, if I look at the U.S. Treasuries versus bonds, we think that the trade here seems to be clearly for the bonds to continue to outperform in that sense, the long end of the curve. On purely in terms of Brexit, I think there is clearly a probability there that the market is that is clearly the case. We think that the market is underpricing the probability of a near-term resolution and a move in the positive direction for the year. Vishy, just quickly, why is that positive for bonds?
Well, it's positive for the bonds only to the extent that the rate differentials are certainly constructive for the bonds.
Okay, we'll talk about this another time, Vishy. Vishy Tripatur of Morgan Stanley. Thank you, sir. Looking at the Italian bond market this morning, Tom, big rally, long end of the curve, down 6 basis points on 50s. 50-year Italian debt, down to about 1.8%. Your 10-year debt over in Italy, 0.69%. We come in another 3 basis points. Record lows, Tom.
And your point there is you book Vishy for one of your other properties. John, I know what you're doing. I know I know what you're doing there. You think we're not, Lisa and I aren't onto this game.
Nailed it.
Do you think nailed it? Thank you, Lisa.
Anytime.
But John, what's so important there is the U.S. bond market is not open. What would U.S. bonds be doing today? It's a mystery.
It's a mystery. I'm sending Vishy an IB right now.
I'm sure
just
you
to
are.
Explore that with a little bit more depth. Just to do the things that I don't get to do here. Coming up next, Leslie Vinjer-Murray of Chatham House, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Heard on Bloomberg Radio.
Sure.
Seen on Bloomberg TV. Here's your price action. Equity futures with a lift. As Tom points out, the bond market, the Treasury market is closed in the United States of America for Columbus Day. 118 handle on euro dollar. We come in about a quarter of 1%.
Went over the Atlantic, discovered America.
Is that right?
Nina,
Did he?
Pinta,
Did he?
Santa Maria.
What year was that, Tom?
I don't know. They saw the thing and they said, "What's that?" French horns.
That
That's going to be
Stan
just
Freeberg.
like that.
I did that for the late
Tom,
great
you
Ken
should
Pruitt.
teach history classes remotely for school
I
children
learned my
across
history from the
Manhattan.
great Stan Freeberg.
Wonderful. Wonderful. From London and New York. This is Bloomberg.
With the First Word News, I'm Kaylee Lyons. President Trump and House Speaker Nancy Pelosi are blaming each other for lack of progress on a new stimulus package. The president told Fox that Republicans are having a hard time with Pelosi. Meanwhile, Pelosi called the administration's offer grossly inadequate. The two sides are about $400 billion apart, but even if there is an agreement, it's not certain if Senate Republicans would approve the measure. Minneapolis Fed President Neel Kashkari warns the country needs more support from another stimulus. Kashkari told CBS that economic recovery has flattened out. He says we will see a grinding, very slow improvement with thousands of small businesses going bankrupt. Senate confirmation hearings begin today for President Trump's Supreme Court nominee. Amy Coney Barrett will cast herself as a judge committed to avoid policymaking and keeping her personal views out of rulings. Democrats are concerned that Barrett will rule against abortion rights if she is confirmed, as expected. In the UK, Prime Minister Boris Johnson is set to increase restrictions to contain the spread of coronavirus. He'll announce a new tiered system of alert levels that will result in millions of Britons being subject to more stringent curbs on their lives. And AstraZeneca says that an antibody medicine against the coronavirus is moving into the final stage of clinical tests. It will be given to more than 6,000 people starting in the next few weeks. The drug will be evaluated for its ability to prevent infections for up to a year in some people. It can also be used as a preemptive medicine once patients have been exposed to the virus in others. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Kaylee Lyons. This is Bloomberg. This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
She'll be confirmed no later than Tuesday, a week before the election. That's my hope. It'll be up to Senator McConnell what to do after the 22nd, but we can easily get her confirmed before the election.
Senator Lindsey Graham, the Senate Judiciary Chairman, speaking to Fox News over the weekend on the Supreme Court justice vacancy that the Republicans are looking to fill before the election. From London and New York this morning, good morning. Alongside Tom Keene and Lisa Abramis, I'm Jonathan Ferro. 1 hour, 12 minutes away from the opening bell. Your cash open just around the corner this Monday morning. Good morning to you all. We had some weight to last week's rally, up 0.6%, near session highs now, up 21 points to the S&P 500. We've said it once, twice, 3, 4 times. We'll say it again for a 5th time. The bond market is closed in the Treasury market for Columbus Day. FX market, euro dollar 118, slightly weaker euro in the mix here. Stronger dollar across the board, including against the Chinese currency. The Chinese losing a little bit of tolerance for the strength we've seen over the last couple of weeks, Tom. 674 on the offshore.
It'll be fascinating. Again, new highs here, up 21 on SPX. Really some strength to the tape this morning. Right now on the election, and also some of the oddities of this odd 2020. Leslie Vinjamuri joins us with Chatham House out of Westland of Connecticut and LSE, and her wonderful work at Columbia as well. Dr. Vinjamuri, thank you so much for joining us. Leslie, I want to go inside baseball right now, and it plays off of the vice presidential candidate for Mr. Biden. We have 2 senators from California, the elderly Feinstein and Senator Harris. Does the Biden campaign and does Vice President Biden want Senator Harris to be visible at these Judiciary Committee hearings? Is that a plus or is that a minus for the campaign?
I mean, you raised that is a very interesting question, and of course, it depends, right? It's not the visibility; it's what is said, what questions are raised. I think people are always looking to Kamala Harris to read her tone. To be sure that she is the number 2, not the number 1. You remember in those vice presidential debates, she continually brought the question back to Joe, just to reassure the American public that she is on the ticket as the vice presidential candidate. Very important, I think, in this particular election. So I think a lot will just come down to the nature of the questioning. I'm sure that she's thinking very carefully, being coached very clearly.
Yeah.
About tone and temperament.
I'm struck as well, John and I were mentioning this earlier, how invisible Joe Biden was this weekend and really within the zeitgeist of a Columbus Day Monday morning in America. Leslie, you remember Columbus Day has to do with coming across the ocean, Nina Pinta, Santa Maria, and all that. I mean, where is Vice President Biden, or is that the plan?
Well, look, Tom, as you know, the polls demonstrate that whatever Vice President Biden is doing, even if it's remaining low key, it's clearly working. Columbus Day is a very interesting one on the back of Black Lives Matter and the attempt to rethink America's identity. That's not an uncomplicated national holiday. But I think, gearing up, saving that energy and knowing, what's coming down the line. And I think knowing that the polls are heading in Vice President Biden's direction. Of course, that could be, it all comes down to who's voting now and who turns out on the day. And so it's unsurprisingly a lot of uncertainty right now. But I think it's probably about waiting for Monday and the last 3 weeks of what is going to be a phenomenally intense lead up to the elections.
Leslie, it's obvious to say that every campaign has a weakness. Not all campaigns and those weaknesses are created equal. But one weakness that has come up with the Biden campaign is the issue of court packing and their ability to actually answer a question on it. What are your thoughts on that at the moment?
No, it's very clear, right? That question came back several times in the vice presidential debates. Kamala Harris deflected it. I think that probably they haven't decided, and they certainly don't want to see that become They don't want to see their campaign tainted by the idea that they're going to manipulate the courts. So backing off of it at the same time, not wanting to be held to clearly stating that they would not do this, because perhaps it's a card that they might want to play should the vice president be elected on November 3rd.
Leslie, President Trump holding his first rally since his COVID diagnosis. How does this read in public? Will this gin up more support for him, or will it go in the opposite direction with people saying that he's being irresponsible with the pandemic still present?
Like, we've seen the vast majority of Americans lack confidence in the president's handling of the coronavirus. This has only increased with his own sickness with the virus. And so I suspect, his gamble is that he's got to keep those voters who are on his side enthusiastic enough that they actually turn out and cast their votes. I don't think anybody is anticipating that people will change their minds when it comes to this question of how they evaluate the president's handling of the pandemic or his own personal health. But there is a very serious issue, which is around getting people to turn out and people to vote. And I think for a lot of Americans, it's going to drive them, for those who are already leaning against the president or possibly on the fence, that tiny percentage of people who haven't decided, it's unlikely to persuade them, I think, to lean in towards President Trump.
Leslie, we were talking with Martin Schenker, our chief content officer, earlier about this fabulous idea that no one's paying attention to Florida. There's a few electoral votes. I believe it's 45-45. Maybe I'm off by a couple points. You frame Florida for the next 5 days.
I mean, I think I think many of us are watching Florida. You're right that everybody's very focused on Pennsylvania because of all the court cases and the pressure on the president's failed case and efforts to really push on what's going to happen with the mail-in ballots. But Florida's going to tell us so much. It's going to tell us probably on the night. It's a state where things are very, very close, where turnout will be everything. And if it goes one way or the other, and by a significant percentage, then we'll have a much clearer picture of which way the election is heading. And also, if either candidate wins decisively, we might have some clarity sooner rather than later. And of course, one of the gravest fears, I think, for many of us is that this election could run for several weeks if Florida's very close.
Certainly something this market was worried about a couple of weeks ago, and now all of a sudden, not so much anymore. Leslie, lucky to have you on the programme, as always. Leslie Vinja-Murray there, Chatham House head of the US and America's programme. Just to go through the president's programme for the next several days, Tom, it's quite remarkable for someone who was hospitalised only a week ago. So Orlando tonight, Pennsylvania tomorrow, Iowa on Wednesday, and North Carolina this coming Thursday. Very active schedule for someone only out of hospital in the last week or so, Tom.
I'll give you Washington Post as credit. I may be off on that, John. There's some real concern within the Trump complex about his durability over the next 4 or 5 days.
Certainly has always been an energetic campaigner, a man who's recovering.
Oh, he wants to get out there. Absolutely. Yeah.
Absolutely, Tom. Absolutely. Coming up on this programme, Paul Donovan, UBS Global Chief Economist, weighing in on the economic data. A loss of momentum, stalling perhaps in Europe, and quite a recovery in China. A lot to discuss very shortly right here on this programme. Alongside Tom Keene and Lisa Abramovitz, I'm Jonathan Ferro on this Monday morning. Good morning to you all. This is Bloomberg Surveillance.
has been interrupted. Uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
From London and New York, this is Bloomberg Surveillance for our audience worldwide live on Bloomberg TV and radio. Alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro. 60 minutes away from the opening bell, just around the corner. Equity futures ticking higher, going into that cash open. Futures near session highs on the S&P, up 0.7% now. Another lift to this market, up 23 points on the morning. In foreign exchange, talked about this through much of this morning. Euro dollar 118, slightly weaker euro, stronger dollar against the euro and against the Chinese currency overnight as well. As for the economic data coming up, you will get CPI in America tomorrow, PPI on Wednesday, claims on Thursday, retail sales the back end of the week. A huge focus on the loss of momentum, not just in the US economy, but across Europe much more so. Take a listen to what Mohamed Al-Arian of Allianz had to say.
Throughout the advanced countries, the pace of economic recovery is slowing. And I can't think of any exception to that general statement.
Tom, I would have to say that is much more prominent in Europe right now, and I'd pick on the UK in particular before these new restrictions come into force, a recovery that's really started to stall.
Yeah, stall with disinflationary tendencies, and of course across the Atlantic a little bit of inflationary tendencies, and maybe some of that devolves into the equity market. Again, bonds, we don't see full faith and credit paper in the United States today. It is Columbus Day. Right now, Paul Donovan, to get to it very quickly here with UBS and their global chief economist. In the zeitgeist this weekend, Paul, there's no question about it. Can you believe China's recovery? Can you?
Yes, I think China has had a genuine recovery. China's recovery was very different from what we saw in Europe and in the States, because in Europe and in the States, people acquired savings during lockdown. And then as soon as they're released from lockdown, you know, you've just spent 3 months sat at home watching home makeover shows on Netflix. What are you going to do? You're going to go rush out and spend the money. And that's exactly what happened. And once you've spent the savings, then obviously the momentum slows. Slowing fourth quarter momentum is hardly a surprise. You know, every economist was expecting this to happen. But China didn't have that model, because in China's lockdown, people weren't able to accumulate savings. They were having to live off their savings because there's a far less efficient social security net. So what's happened in China is that there was a pause before the domestic consumption started to kick in, and that coincided with the recovery in demand that we've been seeing in Europe and in the States.
Can you bring that recovery in demand over to GDP in the U.S. and in Europe? And by that I mean equity markets today, Dow 28,581, SPX almost up to 3,500, almost out near record highs. We're a bit away from that. I don't want to oversell that. But Paul, can you look at the expectation of the equity markets, and how far out do you get that real GDP that goes with that?
Well, we've got to remember, of course, that there's a really important distinction, that the equity markets are just a subset of GDP, and listed companies are not actually nearly as important as people think that they are. And so what we're looking at here is a GDP environment where a lot of the negatives on GDP are actually in sectors a million miles away from listed equities. So it's the small restaurants that are suffering. It's the small service sector businesses that are suffering. These are not listed companies. These are mom and pop stores. They're not in a position to be quoted on equity markets. The listed market tends to be more biased towards the manufacturing sector. Manufacturing's doing better than services. It's got better access to capital. It's got better control of its costs. The listed sector is going to outperform GDP in this environment. And that, of course, is exactly what we're seeing happen.
Paul, I'd love for you to compare and contrast what's happening in the United States and Europe, not just the US and Europe versus China. There's a trade that's become really popular in the bond market over the last several weeks. I'm sure you're familiar. Short treasuries, get long Europe, just the idea that this US recovery continues and it stalls in Europe. What you're seeing right now, just the trajectory of the respective recoveries, does it speak to that?
Well, not really, I would say. So what we're seeing now is a shift. So as I said, we've had this surge of consumer spending fueled by the savings accumulated in lockdown. That's pretty much universal in the developed world, and that's your third quarter story, record third quarters. As we go through the fourth quarter and into next year, fiscal policy is going to start playing a larger role. And there we're going to have, I think, some issues. Now, depending on the election result, we might get a large fiscal stimulus in the States in January. But of course, the negotiations in Washington at the moment rival Brexit for the delays and the chaos and the internal tedium of what's going on. So the failure to do fiscal stimulus now is actually doing real damage to the US economy. First, because if you're unfortunate enough to be unemployed, you are clearly on a far lower income than you were. And second, and economically this is very important, if you are afraid that you might become unemployed, that fear of a loss of income in unemployment is likely to delay spending. And so what we're getting here is two hits to the consumer through fiscal policy. Now, that's not in evidence in Europe. In Europe, we are seeing the number of people on furlough fall, but that's because they're being rehired, not because they're being made unemployed. And so I think that the fiscal policies on the two sides are creating slightly different stories at the moment. The US will grow faster than Europe simply because of demographics. I mean, there's no surprise about that. We know that. But I think actually Europe's fiscal policy at the moment is clearly supportive. The US, we've got this cloud of uncertainty over the fiscal support.
So this is slightly contrarian, Paul, and I stress this is relative to expectations and anecdotally just the conversations we would have on a program like this. But you seem less constructive on the US recovery than, say, most.
Well, I'm still constructive. I mean, the recovery carries on in the fourth quarter. I think, though, that we are seeing some damage to the recovery come through from the indecisiveness over fiscal policy in the United States. I mean, there are plenty of people who are relatively secure in their jobs. They'll continue to spend. They'll spend down their savings. That's all great. If you look at the employment participation in the States, it's very interesting. The high-skilled people who've got college degrees, they've got pretty much normal employment participation. Low-skilled people who fail to graduate high school, have also got almost normal employment participation. The area where employment has been weakest has been people who graduated high school but did not go to college. And that, of course, is an area where you're likely to see quite a lot of service sector jobs. These are the jobs which are at risk in the fourth industrial revolution, but that's the area of weakness. And I would argue that fiscal policy today is not doing much to help that particular cohort in a way that perhaps it is helping in Europe.
On both sides of the Atlantic, however, in the U.S. and the U.K. and the rest of Europe, you're seeing this bifurcation that you talked of earlier, you touched on, of big companies doing better or having a better chance of surviving while smaller businesses go out of business at the fastest pace, in some cases on record. And there was a statistic in the Wall Street Journal over the weekend showing that smaller businesses account for an incredibly shrinking portion of overall employment in the U.S. and around the world. How much does that hamper global growth going forward?
Well, now this I think is a really interesting issue because you're quite right, of course. We're seeing lots and lots of small businesses close, but we're also seeing a phenomenal pace of small business creation at the moment. I mean, it's absolutely staggering, the rate of small business creation. And it's not just the States. This is the UK, this is France, this is Singapore, this is Japan. I mean, it's across the board. And we're talking sort of business creation rates of 100, 150% growth. I mean, these are not small numbers. So what I think is going on here is we're seeing lots of people set up individual businesses. Single proprietors are setting up businesses. You've had some time to reflect at home over the last few months, and you've decided that now is the time to start selling your hand knitted sweaters on eBay, or you're going to convert your TikTok account into merchandise sales, or whatever it is. Now, that, I think, raises a really interesting question about the future and about how we think about employment, because I think we end up having multiple income streams become a lot more common. So you'll have somebody who maybe has a job, full-time job, part-time job, but then they've maybe got a sideline, be that Airbnb or selling over social media, whatever it is. And so you have these multiple income streams. So there are positive as well as negative signals in business creation at the moment. And I think that what we've got to try and do is understand how the structural changes of the economy, which we're rapidly going through at the moment, might actually be changing our concept about what it is to actually be employed, and how people actually get income in the months and years ahead.
Hey, Paul, great to catch up. That final topic that Lisa introduced, really important. We could continue this conversation for a long time. Paul Donovan of UBS. Paul, thank you, sir. Just want to bring up a chart intraday of S&P 500 futures, give you a snapshot of where we are going into the opening bell about 50 minutes away this Monday morning. Session highs of 26 points, Tom. We advanced 0.75% on the S&P 500. Just on the brink there, you see it staring down 3,500 on S&P 500 futures right now.
Well, we're in a corrective state. I'm looking for an entry point, John. I mean, it's a correction,
one day
right?
you'll have the confidence and conviction to do it, Tom, to rotate out of cash.
I thought we were in a correction.
Equities.
Like, what was it, 3 hours ago?
That was 3 weeks ago. Look, this narrative, we talked about it a couple of hours ago. It's shifted so quickly, Tom. 2 weeks ago, it was contested election fears. Now it's all about blue wave. And at the start of the year, if I said blue wave to you, I would have heard market participants saying that would be negative for markets, the regulation, the taxes, and everything that comes with it. And now it's all about fiscal stimulus and nothing else, seemingly.
Well, yeah, the stimulus, whether now or in 90 days, I take the point, John, but I'm going to go back to what I saw. The Journal, I know, had a great article on this weekend. Gina Martin-Adams has been way out front. John, at the end of the day, it's about earnings, and the vector on earnings is to a better world.
JP Morgan numbers just around the corner. Earnings season
tomorrow?
Is upon us this week. That is tomorrow, Tom Keene.
That's exciting.
You're looking forward to that?
Yeah.
Get your hands around some numbers, some quarterly numbers. Will you get any guidance, do you think? I doubt it.
No, I don't know. I mean, the loan mystery will be something. I mean, the pandemic. I mean, what are they going to do in terms of write-downs and all that? I don't know. I don't understand any of it. I just listen to,
You're selling it. Everyone's looking forward to it now.
Who knows what's going to happen?
Alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. There's the promo for earnings
season.
Lisa,
Mike busted his chops enough today.
Right
I'm really working on it.
For goodness sake. Get me to
They're
the 9
shutting
o'clock.
the pubs down.
This is Bloomberg.
With the First Word News, I'm Kaylee Lyons. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin are expected to keep talking about a new stimulus package, but there's been little progress. Pelosi and President Trump are blaming each other. The two sides are about $400 billion apart. Meanwhile, the president is brushing criticism from Senate Republicans who said it's too much money. Joe Biden is maintaining his double-digit lead in the polls. A new survey from The Washington Post and ABC News had the Democratic candidate leading President Trump 54-42 nationally. Meanwhile, a poll from CBS shows Biden ahead by 6 points in both Nevada and Michigan, and he's tied in Iowa, a state President Trump won easily in 2016. Meanwhile, President Trump tweeted he's now immune to the coronavirus since he's already had it. But Twitter took exception to a presidential tweet on the matter. The company marked it as a rules violation for spreading misleading and potentially harmful information related to the virus. Windy and hot conditions return to California this week, and PG&E says it may need to cut off power in the northern part of the state to reduce chances of its equipment starting wildfires. The utility emerged from bankruptcy in July after having paid more than $25 billion to resolve fire claims. And in pro basketball, the Los Angeles Lakers have won their first NBA title in a decade. They beat the Miami Heat 106-93 in Game 6 of the best-of-7 series. LeBron James led the Lakers with 28 points and was named the series' most valuable player. The NBA, of course, suspended its season for 4 months before resuming in a self-contained bubble at Disney World. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Kaylee Lyons. This is Bloomberg.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
You don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
It is just time for companies after a really long bull run to take a look at the company, to take a look at what they purchased, look at what they have in their portfolio, and just see if there's something that could be better in somebody else's hands.
Colin Whitmer there, the PwC deals leader, talking to Bloomberg Surveillance from New York and London. Good morning to you all. Alongside Tom Keane and Lisa Bramvitz, I'm Jonathan Ferro. With equity futures just off session highs, up 25, plus 0.7% on the S&P. A little bit later, we talk about poverty, the economic mess and the state of the global economy with David Malpass, World Bank President, just ahead of those IMF World Bank meetings, Tom. We'll do that at about 9:10 Eastern on Bloomberg TV.
Very interesting this year to see how those October meetings go. Very virtual, to say the least. Futures up 26. We're monitoring this very carefully. NASDAQ futures up 1.9%. Extraordinary, up 219 points. Right now, on what hasn't moved, Allison Williams of Bloomberg Intelligence, she and her team do just spectacular work on the banks and on the financials. We start the folly tomorrow as well. Allison, they are so far behind. What will earnings season do to give you clarity and an outlook where people can buy the banks?
Well, I think the main question from an earnings standpoint revolves around credit, and unfortunately we're not going to get probably much more clarity there. And then, we do have this lingering issue of paused buybacks and dividend limitations, and unfortunately we're not going to get an issue there, except to know that the regulators sort of continue to have these caps. We're in the second round of stress tests. So unfortunately for the bigger questions, we're not going to get answers. I think the focus really continues to be on credit, and the positive thing is that we are going to see sort of lesser provisions. So we had these huge builds in the first half. What's interesting as we're going into earnings is the estimates for those provisions have been declining. And in fact, a few of our banks have said that they expect almost no reserve building, so provisions just sort of equal charge-offs, and so perhaps hitting a little bit of the pause button there in this big reserve build.
Allison, if consensus is right in markets, there will be a blue wave, and you'll get a Democrat control of the House and the Senate and possibly the White House. This would mean higher taxes, and the higher taxes would hit banks arguably disproportionately. Do you expect them to field any questions or give any information as to how much that could affect their profitability?
I think they definitely will field the questions. I'm not sure, again, if we necessarily get any hard answers, but I think the election is definitely a topic for discussion. Another topic for discussion is going to be, I think, M&A, not just within the U.S., but globally. So within the U.S., we had a big deal announced last week, Morgan Stanley buying Eaton Vance. That's very consistent with what they've said. It gives them some new capabilities in asset management. But we've had, J.P. Morgan making comments earlier in the year. Goldman Sachs has done some smaller deals. Obviously, deals were sort of on pause when the banks were basically conserving capital for clients. But will that sort of restart? And then, sort of overseas, there's a lot of talk about UBS looking for a partner. Could it be Credit Suisse? Could it be Deutsche Bank? And what could that mean to the bank from a competitive standpoint?
Allison, in your world, I get the idea everybody's in control and they're moving at a leisurely pace, baloney. What's the urgency to merge right now? Forget about the big banks. In the super regionals, the regionals, even the small banks of America, what's the pressure to merge right now?
I think the pressure to merge really relates to the benefits of scale and sort of the virtuous cycle that has been seen at banks like J.P. Morgan, right? So as the need to spend on technology and as that has really been the key battleground, I think that has sort of driven the need to spend, the need to be big enough to spend enough. And we've seen it at J.P. Morgan and Bank of America in terms of gaining share in their home market and deposits with their digital banking capabilities. And then we're seeing it overseas in terms of, banks like J.P. Morgan, Morgan Stanley, and Goldman Sachs, as well as Bank of America and Citi, all gaining ground in the last several years, and a lot of that really relates to digital as well. But the one question we do have is, scale is necessary but not sufficient.
Okay, well said. But what I wonder about is just bulk profitability of the industry. Do they need to merge to sustain appropriate profit, or can they do that alone, irrespective of the technology mandate you speak of?
Well, I think what we've seen in the trading businesses really is that the scale and getting more efficient, as I said, so it creates this virtuous cycle in terms of you gain more share, that gives you better profitability, you have more to spend on technology, you gain more share. And if you look at the sort of the U.S. banks versus the European banks, the U.S. have had this virtuous cycle. They've also had a better economy since the global financial crisis, whereas in Europe, that has really not happened. And it every year we think, like, okay, so we've gained share, and other players pull back, and other players pulling out of businesses. This, at some point, the share gains are going to slow, but that doesn't seem to happen.
I haven't had a chance to talk to you, Allison, since James Gorman did his ballet, E-Trade and Eaton Vance. Is Morgan Stanley a bank, or has he basically said, we're not a bank?
So he wants to tilt more towards wealth management, and so it's obviously different from the days of investment banking, which is their core capability. And they still are, for the most part, the largest in equities trading. Goldman actually did do a little bit better than them in the first half. They're still big in FICC. They're still big in M&A and equity underwriting. Equity underwriting, which is going to be a great business this quarter. But they really have said over time they want to shift more towards wealth. The big transaction they did years ago was the Smith Barney acquisition. And then this year, they did some smaller things in 2018, 2019, and then this year, E-Trade, and now Eaton Vance. And I think the bank has paid full price for both of these. And actually, I think James Gorman acknowledged that in an interview on Bloomberg the other day. So that's interesting to see him say that he paid a full price. But the point is, it's a strategic deal. It's not a cost-cutting deal.
Allison Williams, thank you so much. The Derby starts tomorrow. Thrilled she could be with us. With Bloomberg Intelligence and, of course, all of our work on finances. Shonali Basak with that important interview with Mr. Gorman the other day. Please look for that out on Bloomberg Digital. Futures, well, I don't think it's a record peak, but we're right up there on the day. I mean, up 25 points. Bonds closed, Columbus Day. Full faith and credit shut down. The equity market's on fire. SPX up 0.7%, and it's really put it on over the last 3 hours, up 24 points. Dow futures up 62, a lesser percentage amount, just 0.2%. And NASDAQ just simply on fire, up 1.8% as well. We continue. Please stay with us on Bloomberg Radio, on Bloomberg Television on a Monday. David Malpass coming up on the Open to begin the World Bank's important week. This is Bloomberg. Good morning.
Everything around us, including the way we work and live, has been interrupted. Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
The second half will be a lot stronger than the first half in China. We're heading to what we call the golden season of auto sales.
We are very confident, we're going to have another big growth, 2021 versus 2020.
We did not see people kind of holding back.
Chinese customers are into, right now, buying individual mobility.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From New York and London, for our audience worldwide, good morning, good morning. The countdown to the open starts right now with 30 minutes until the cash open this Monday morning in New York. Equities advance up 0.7% on the S&P 500. We are higher by 23 points, and we begin with the big issue. The market's anticipating another stimulus package despite little progress on Capitol Hill.
Markets are quite focused on stimulus.
Fiscal stimulus.
More fiscal stimulus.
Another very big round of fiscal stimulus in the U.S.
If we want the market to stay at these levels and behave,
I think you need it pretty badly. It is desperately needed.
Markets are expecting it.
It's pricing in, I think, that we'll get more fiscal accommodation.
They're right to expect it'll come.
Fiscal is not a given.
We're used to this political aggrandizement and grandstanding. Ultimately, I think the choice here is between getting something done ahead of the election,
Whether there's stimulus before or after the election.
or waiting until after the election. They'll work something out.
So it's Groundhog Day on Wall Street, with the blame game continuing in Washington. President Donald Trump putting the onus directly on Speaker Nancy Pelosi.
Well, Republicans want to do it. We're having a hard time with Nancy Pelosi. She thinks she can influence the election, and I think they're hurting themselves by not doing it.
Speaker Pelosi addressing the administration's shifting signals, writing in a letter to fellow Democrats the following: "It is hard to understand who is shaping their approach, which to date has been a miserable and deadly failure. Until these serious issues are resolved, we remain at an impasse." Let's bring in Kevin Cirilli, Bloomberg Chief Washington correspondent, to try and make sense of all of this. Kevin, where on earth are we in these talks this Monday morning?
Turbulence. Look, I think there's no question that Speaker Pelosi and President Trump are continuing to really negotiate in public, as one source put it to me, Jonathan, over the weekend. It also comes at a time in which the president is set to hit back on the campaign trail. He's got campaign stops every day of this week, starting in Florida. Then he'll go to Pennsylvania, as well as Iowa, and then finishing the second half of this week in North Carolina. It really shows you, Jonathan, just the spread that Republicans feel they are losing in terms of the ground, with polls suggesting that Vice President Joe Biden is really beginning to have double-digit leads in some of these states. Iowa, in particular, typically a Republican stronghold now, where Biden's up by 5 percentage points, also has impacts on down-ballot races and control of the Senate. I also want to note another major story that's coming out of Washington this week, and that's not the negotiations, but the confirmation hearings for Judge Amy Coney Barrett, which are set to begin today, and then the question and answer period will be tomorrow. So some volatility on the SCOTUS front as well.
Well, Kevin, you took us to the Senate. Let's sit there just for a moment. We've focused on that spread between the administration and House Democrats. We haven't heard much from Leader McConnell on whether he would expect anything in and around $2 trillion to pass the Senate. 1.8 was the number thrown out last week. Then I heard 2.3, more than the Democrats. Can Leader McConnell pass a deal that big in his Senate?
No. No, he cannot. And when I talk to sources in the Senate as it relates to the size of the price tag, Leader McConnell is fully aware of where the caucus is and where lawmakers in tough races as well as in red states, how much they are going to be able to spend. Look, you know, there are the fiscal stimulus negotiations as well as the Supreme Court nomination process coupled with the election is providing an incredible amount of tension and strain, really, for Senate leadership on the Republican front. They have to be able to guide this to the finish line. And now there's an even more careful nuance. You look at a state like North Carolina, where Senator Tillis is up against Cal Cunningham in a very, very politically rocky race that has been upended by a host of different headlines and personal headlines, really, coming from that state. And it just shows you the level of intensity. So it's typically, we say this carefully, but typically in a month out, less than a month out from an election day, these types of things don't get done. And now you have two monumental stories of stimulus and Supreme Court nomination process really adding to the intensity of the moment, Jonathan, coming from the nation's capital.
Kevin, two things you mentioned in that response. Let me pick up on both. The hearings that are set to begin in the Senate begin right now for Amy Coney Barrett. That's one. Here's point two. You mentioned Senator Tillis. He's been part of the write-up that I think every single news outlet wrote up over the weekend, and that's the small piece of daylight, just that little bit of daylight that some Republican senators are putting between themselves and the President of the United States. I believe Senator Tillis of North Carolina actually said, we need to be a check on a potential Biden presidency. Ted Cruz was out on CNBC in the last couple of weeks talking about the prospect of a bloodbath, and we've had senator after senator just start to push back and push away from the president a little bit. What's in that, Kevin?
That is their ability to protect themselves. I mean, for lack of a better term. I mean, and this is something that is not unique to politics. It is unique to the Trump moment that we find ourselves in. And look, Senator Tillis is not going as far as someone like, say, Senator Mitt Romney of Utah, for example. But there is this expectation that, especially as the Biden campaign tries to pick away supporters from Republicans who are uneasy with the president's rhetoric and uneasy with how the president has conducted himself from a rhetorical standpoint, that those people like Senator Tillis try to get them back over. It's why I think that race is really a fascinating illustration of the 2020 political culture, simply because now Republicans in that state are raising concerns about Cal Cunningham and his character. And so as a result of that, I think it's a very intense moment. Look, to watch in the confirmation hearings, and this is the final point I'll make on this, there's going to be a lot of politics, a lot of volatility, but look to see for how some of the more rank and file members question her on how she would govern or how she would rule and on business cases, because there's a ton of cases coming up on the CFPB, on the SEC, CFTC even. And look, you look at big tech, you could have some antitrust cases before the court over the next couple of years. So, you know, pay attention to the Q&A tomorrow. That's what I'm going to be looking for, to see what a 6-3 majority on the court would mean for business rulings over the next, really, decades.
Kevin, looking forward to the reporting coming up through the week. Kevin's already there down in Washington, D.C., 23 minutes away from your opening bell. Equity futures pushing higher on the S&P 500. Biggest weekly gain since July last week. We add some weight to it, up 0.7%. Treasury market closed for Columbus Day. Check out the bond market. Yields come in, not just in Germany, in Italy, Spain. In Italy, record low yields at the long end of the curve now, 10s and 30s. We'll talk about that a little bit later. The focus, no doubt for many of you, 3 weeks tomorrow, a U.S. election and the president returning to the campaign trail, hoping to reverse unfavorable polling trends. A new Washington Post ABC poll showing former Vice President Joe Biden leading by 12 percentage points among likely voters with just 3 weeks to go. Joining me now, Troy Gajewski, Skybridge Capital Co-Chief Investment Officer. Troy, great to catch up with you, sir.
Yeah, good morning, Jonathan.
Talk around fiscal talks. Is it justified or not?
Well, look, it's going to be a tough lift. It was going to be a tough lift before the passing of RGB, and with all the acrimony in the Senate already, combined with the hearings, it looks like it's on life support. And, you know, we don't see a very high chance that it gets done before the election. So, you know, the main reason markets have been rallying past week into this week is that as Biden consolidates his lead, which, as you reference, is fairly dramatic now, the prospects of a contested election have gone down significantly. And then it looks like there's a good chance that we get a Democratic sweep and get a massive fiscal package sometime either in January or February. So markets are looking ahead to that now, saying, hey, even though in the short term, we're probably not going to get stimulus, we're going to have a huge one come January or February.
Seems to be a matter of when and not if, and that's the only thing that seems to matter. Just when and not
size.
If. But when
And
it matters
size as well,
is
right?
still important, and size is, of course, still important too. This is what Mohammed Al-Arian, good friend of this program, now of Queen's College, had to say when he weighed in on the gap between capital markets and the real economy. It's this first line that I think is really important. Whether a comprehensive policy response is enacted now or in a few months bears directly on its potential impact. Let me just read that again, Troy. Whether a comprehensive policy response is enacted now or in a few months bears directly on its potential impact. Why aren't we focused on that?
Well, look, you raised a great point, and so does he, that the sooner we get the stimulus, the more momentum we can keep in the economic recovery. Remember, the reason we contracted far less than people feared and have rebounded far more dramatically was because of how massive that fiscal stimulus package was. So you've seen tremendous progress in terms of GDP, in terms of unemployment, you know, the housing market's on fire. But in order to maintain that momentum, sooner is better than later. That being said, again, if you look at potential size, markets are willing to shrug off the fact we might not get it in the short term if we get a package that's twice as large with the Democratic sweep. So we think that's what the market calculus is doing right now, is saying, hey, even though it might be 2 months later and we'd prefer it now because that would continue to drive unemployment down, we're going to end up with something closer to $3 trillion as opposed to 1 to 1.5, which will ultimately have the same net impact.
So the VIX term structure is adjusting to that story over the last couple of weeks. And as you mentioned, it's all about probabilities and relative probabilities now compared to where we were, say, a couple of weeks ago. High yield spreads right now, Troy, are at post-COVID tights since we had that huge widening. I believe we have the tights of the moment and haven't had a single day of widening for the past 2 weeks. The S&P 500 staring down the barrel of 3,500 right now and a couple of percentage points from record highs. How do you want to manage your exposure to risk assets going into year-end, Troy?
Yeah, well, I still think you need to be conservative, particularly if you look at what the Fed balance sheet has not done the past 4 months. It's basically flat to down slightly. M2 growth has slowed significantly. And there's still a chance, you know, that Trump pulls an inside straight and wins the election, or we get a split Congress. And we still think that, from our perspective, a Biden win with a Republican maintaining the Senate, you know, many are arguing that that could be very bullish because you don't get the tax and regulatory changes, but you'll still get a meaningful stimulus. The problem there is that if the Republicans go back to being more Tea Party oriented and want to constrain all spending, then we get back to what we had in 11, 12, and 13, where you had substantial fiscal drag. So we think even given the recent rally, you want to be more conservative. And to your point, you know, high yield is an asset class. It's going to be very hard, if not impossible, to make money. You know, the past several months, high yield is basically flat. You know, the past, you know, last month into this month so far, even with the strong rally in equities are still down a little bit prior to today's open. So it's not a time you want to be sticking your neck out and taking an exceptional risk. You want to see how the election settles and then pick your spots after that.
Troy, great to catch up, as always. Troy,
catch up with you, Jonathan.
Of Skybridge. Good to see you, sir, as always. Looking forward to catching up and hopefully before the election. Up 25 on the S&P 500. We advanced 0.7%. At a market desk ahead of the opening bell with your movers. Here's Abigail.
John, this morning it's all about big tech led by the world's largest publicly traded company, or Apple. Now, Apple has been up over the last 3 weeks, now back above $2 trillion market cap, up this morning again sharply ahead of its 5G iPhone virtual event tomorrow, where the company is expected to reveal 4 new phones, lots of new features, including up to 4 cameras. We see many of the Apple suppliers rallying in sympathy with Apple, and with the big outperformance that we're seeing for the NASDAQ this morning, John, it seems like not just this morning is about big tech, but this could be a true big tech mega cap dominant day.
Abigail, thank you. Abigail will break that down for you at a cash open at about 28 minutes time, or rather 20 minutes time. Coming up on this program, the IMF and World Bank holding annual meetings with the global economy facing a historic recession. That conversation coming up next with David Malpass, the president of the World Bank, right here in exclusive on Bloomberg TV.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Recovery that we saw in June and July has really flattened out. The virus is climbing now again around the country, and so you're seeing consumers pull back and not want to go out, not want to take that risk again. And so, unfortunately, we still have a long way to go in this pandemic.
Minneapolis Fed President Neil Kashkari there discussing the pandemic's impact on the U.S. recovery as new cases continue spreading across the globe. Bloomberg's Micah McKee joins us now for more. Good morning to you, Mike.
Good morning to you, John. Neil may have been talking about the rest of the world, as a matter of fact, because the one thing that every policymaker has said, from Jay Powell to Andrew Bailey to Shaktikanta Das in India, is that the progress of the global economy depends on the progress of the virus. And right now, the virus appears to be getting out of control again. The second wave is happening. You know that all too well, John Farrell, right now, because in the UK in April, they had 4,900 cases a day on average in the worst part of April. And last week, 15,000. Look at France, 13,000, 10,000. They all way up from where they were in the bad part of April. So new restrictions are coming into place, and that's going to shut down some economic activity. Germany's cabinet meeting today to discuss new options. Italy targeting nightlife and social functions, also sporting events. France, which had 27,000 cases on Saturday, shutting pubs and restaurants around the country. And of course, in just about an hour and a half, we have Boris Johnson in London announcing new restrictions on what John Farrow can do. The UK showed the other day what happens when this happens. The growth figures for August came in much shorter than anticipated, half what's anticipated. France is cutting its GDP growth to 0. So at this point, John, it looks like we are really seeing a rebound in the virus worldwide that is having an impact, and it looks like only going to get worse for a while.
Mike, thank you, sir. 3:30 local time. That address from the Prime Minister coming up here in London very shortly. We'll bring you some of that right here on Bloomberg TV. Now to confront some sobering statistics. The IMF and World Bank meeting amid the worst recession since the Great Depression expected the pandemic to severely impact inequality, writing in a report, quote, COVID-19 is estimated to push as many as 115 million people into extreme poverty this year, with a total rising to as many as 150 million by 2021, depending on the severity of the economic contraction. We're lucky this morning to say that World Bank President David Malpass joins us now for an exclusive interview. David, fantastic to catch up with you, sir. And for people familiar, not familiar rather, with the statistics here, extreme poverty, people living on $1.90 a day. How bad are you expecting this to get?
Hi, John, and hi, Michael. Well, it's already gotten bad. That's showing up in the numbers and likely to get worse as we go into 2021. And one notable part of this global recession is the inequality of it. That in 2008, there was a great financial panic. It hit people's stock markets and their bond portfolios and so on, but it didn't have as much effect on the developing world. This one is much deeper deeper in the developing world and likely to deepen if there are further shutdowns in the advanced economies. One of the things our numbers show is that the advanced economy, the recession, has actually been somewhat less severe than the estimates in June. But for the developing world, the recession has been worse than what was expected in June. If you excluding China, China's in a bit of a recovery phase, but the other developing countries still in a worsening recession.
David, given what you're seeing play out right now, and there used to be a stigma attached to asking this question, but I'm not sure there is anymore, whether the cure for this virus at the moment and the approach from developed economies is worse than the disease, given what you're seeing play out in poorer countries?
It's hard for us to judge. History will look back and try to assess. But for the poorest in the world, COVID is a problem, but a bigger problem for people is no jobs and increasingly this problem of food shortages, scarcity as their incomes go down. One of the things that hit the developing world so hard is the remittances got cut off from their workers that were working outside their country. That might be across a border, or it might be in one of the advanced economies. They would be sending money back every month to their families, and that got cut off rather suddenly. Another thing is just the activity. The activity level of the world for many countries is down 10% from what it was a year ago, and that means health problems for children. They're out of school. They're not getting their vaccinations. And in many cases, malnutrition is on the steep rise.
Mr. President, we've talked about the problem. There is a huge one. Let's talk about how you're looking to remedy it, or at least offset some of the issues in the developing world. The debt service suspension initiative is something that you've pushed forward. I believe it expires year-end. You want it extended. Can you walk me through how far out you'd look to extend that initiative?
Yeah, we'd like to see it extended another year, but I should note on it, it's only providing shallow relief, and we need to do much more. The reason it's shallow, what this has done is said that the poorest countries should not, in this crisis, given the severity of the crisis, starting last May 1st, they were able to stop paying their debt service. That means principal and interest to official bilateral creditors, really the richer countries plus China, and they could stop those payments, and the commercial creditors were supposed to join that initiative as well. That means banks and hedge funds, for example. Unfortunately, they didn't, and even the bilateral official creditors didn't fully participate. So the savings for these countries, we're talking about the poorest countries in the world, they're still paying their debts in some cases, and so that I think should be broadened and then also extended in through 2021. And the reason for that is it gives time for the world to figure out a way to actually reduce the stock of debt, the amount of debt. What's happening right now is people just add delay the payments and add interest on at the end of it. That's what the richer creditors are doing, and that's not going to provide light at the end of the tunnel for the poorest people.
President Malpass, when you said there that bilateral official creditors didn't participate in the way that you hoped, do you mean China? And is that still the case?
Some of China's biggest creditors, the ones that are owed billions and billions of dollars from the poorest countries, are continuing to take those payments and not giving relief. And that's still the case. And the arguments last week were intense within the G20, which China is a major participant in the G20 and has not wanted to proceed or deepen this debt moratorium. And so we'll have to see how that plays out over the next few days, because as the big meetings are coming up this week. My hope really is that China would recognize that it's very much in its interest and in the interest of the poorest countries to reduce the burden and then find ways to grow faster in the future. We all have a common stake in the world, and so it's important to really adjust the thinking about where these debt burdens stand. It's not the people in the poorest countries simply don't have the resources to keep paying these high interest rates on this kind of debt.
David, I hope you have some success there, and we look forward to an update. Appreciate your time this morning, and good luck for the rest of the week. David Malpass there, the World Bank president. Thank you, sir. From London and New York, this is Bloomberg.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Your morning calls start with Citi upgrading PepsiCo to a buy, a 169 price target. The analysts citing improving profit margins and earnings growth. Next up, Barclays downgrading United Airlines to equal weight. The analyst expecting a slow recovery stemming from international health barriers. And finally, Deutsche Bank upgrading Twitter to a buy. The analyst expecting improving user growth to drive monetization. They're 3 of the calls. The cash open up next with futures higher. This is Bloomberg.
when opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacqua.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
25 seconds away from the opening bell this Monday morning. Good morning to you all. Near session highs up 23 on the S&P 500 after the biggest week of gains since July. We had some weight to it this morning. Your outperformance, it's on the NASDAQ. Look out for that at the open. Switch up the board in the bond market. Treasuries closed for Columbus Day. The president will be busy. He'll be in Orlando today, Pennsylvania tomorrow, Iowa Wednesday, North Carolina Thursday. 3 weeks away tomorrow. The election in the United States of America. Outside of the Treasury market, which is a snoozer because it's not open. Look to Italy. Record low yields on a 10-year and the 30-year. In the FX market, euro dollar 118 handle. We come in 0.2% there. And crude, $40, coming down about 1.4%. That's the cross-asset price action at the market desk with your movers. Here's Abigail.
John, let's start out with that outperformance for the NASDAQ, as it has everything to do with big tech, as you were just talking about. And leading the way is Apple. Now, Apple has been up 3 weeks in a row, back above a $2 trillion market cap. Tomorrow, of course, they'll be doing their virtual iPhone reveal event. So the risk-on tone that we have for some of these tech companies, Apple, Microsoft, Amazon, and Alphabet, that is more than 20% of the weighting for the S&P 500 right there, more than 30% for the NASDAQ 100, really helping to explain that outperformance for the NASDAQ. What makes it interesting, though, of course, the 3 top sectors this morning, tech, discretionary, and communication services, those are this year's defense. So there's a risk-on, but still a little bit of a risk-off tone to this, but nonetheless, the NASDAQ really outperforming. Twitter's also higher, as Deutsche Bank has raised its price target on user growth and the ad recovery. JP Morgan had been higher, now a little bit lower. They, of course, will be kicking off earnings season tomorrow for the big banks. And then finally, we do have PG&E down sharply after or ahead of a possible power cut, and as some of their equipment, John, has been seized in the investigation over the wildfires. But for the most part, big tech outperforming on the day for some risk-on tone for the most part.
Abigail, thank you. 1 minute and about 45 seconds into this open this Monday morning. We advanced 0.7% on the S&P. As Abigail points out, the outperformance on the NASDAQ. Top of the pile, IT up by 1.3%. Financials at the moment, unchanged on the day. Turning our attention to earnings this week, financials top of the pile, kicking things off a little bit later with Citigroup and JP Morgan reporting before the opening bell tomorrow. Bloomberg's Sarah Ponzek joins us now for more. Hey, Sarah.
Hey, John, that's right. This week, earnings season officially kicks off. About 30 companies reporting in the S&P 500. That represents just about 8% of the benchmark's market cap. Now, you mentioned banks, but we will also be hearing from healthcare companies and also a few airlines, too. So what are we supposed to see in terms of expected profit growth or declines, which we will see? So in the second quarter, we saw profits drop more than 30%. That was the worst quarter since the financial crisis. Now, as you can see here, we are expected to see those declines moderate in the third quarter with a drop of about 20% from a year earlier. That then will moderate in the fourth quarter as expected before turning positive next year in 2021, albeit those 2021 comps from this year will be very easy, you could say. Still, as you could see, a modest improvement. Now, as Bloomberg Intelligence points out, we will get more direction on the shape of this recovery. You've heard, is it a V? Is it a K? And K has really emerged as the most apropos letter, you could say. If you look at what sectors are supposed to see in terms of earnings performance, as you can see here, tech in the third quarter is expected to see a profit drop of less than 2%. Then staples, utilities, healthcare, all expected to see a profit drop of less than 5%. That compares pairs with much more drastic negative performance for the likes of industrials, consumer discretionary, financials. So there is that that divergence within the market. And at the same time, you have to look at what this is all occurring amid COVID-19, the run-up to a presidential election, the fiscal stimulus still in negotiations, and valuations still high. If you take a look at the S&P 500's forward price to earnings ratio, so it's priced relative to expected earnings over the next 12 months, it's trading just about 22 times projected earnings over the next year. Now, before this year, that's still the most expensive level, John, since all the way back in 2001.
Well, there is a bid in this market this morning, Sarah, that's for sure, regardless of those valuations. Sarah, thank you. 330,500 on the S&P 500, up 0.7%. On the NASDAQ, that's where your outperformance is, up by 1.3%. We've talked about this a few times. What is driving what? Is it the narrative driving the price or the price driving the narrative? You're all familiar with the narratives, the prospects of a blue wave, an inevitable stimulus package, an unwinding of September's correction, sending investors hunting for narratives to continue driving this market higher.
Right now, this market wants to go higher.
The market's looking quite far ahead.
There's a massive fear of missing out.
The increasing probability of, let's call it, the blue wave.
The Democratic sweep scenario.
Very large fiscal stimulus.
All this optimism around the sweep and stimulus and a reboot of the cycle.
The pattern, frankly, looked pretty similar to what we saw in late August and early September.
Flimsy narratives.
You buy the dip immediately, and then we look for a narrative that justifies why we've bounced up.
Nonsense narratives.
The market will hear what it wants to hear.
I think these narratives are going to fall to pieces.
Peter Cicchini there at the end. Nonsense narratives. Kristen Bitterly of City Private Bank joins us now over the phone. Kristen, great to get you on the show, as always. Let me just be up front. You're usually very honest with us and transparent, as I expect from any guest on this program. Is it price-driving narrative or narrative-driving price? Which one is it?
I think, so you have to break it down into short term and then medium to long term. In the short term, I think it's price driving the narrative. I think if we look even just what happened last week, so we're looking at, first it was fiscal stimulus, there was hope, then fear, then hope. Then it's this idea around, is a blue wave actually good because there's going to be more certainty around stimulus and being able to get stimulus through? Will it be easier in terms of COVID and COVID relief? And so I do think that we're struggling a little bit from confirmation bias in this market, especially as it pertains to these day over day, week over week movements. And one of the things that I've actually been thinking about over the past couple of days, and now that we've been talking about Nobel Prize winners, is actually bringing Danny Kahneman into the conversation and this whole concept of thinking fast and slow and our system one operating mode and then our system two. So that system one being that very rapid, quick, instinctual behavioral response, system two being more thoughtful, disciplined, kind of our standard fundamental analysis. System one is dominating the market short term, but it doesn't mean we should ignore system two in terms of looking forward 12 to 18 months.
Well, Kristen, let's talk about those two time horizons then. How you'd invest over the next 3 months versus the next 12.
So the next 3 months, we expect additional volatility. And the reason for that is really when we're looking at the fiscal stimulus and the package, and yes, as I just mentioned, there's volatility around that, kind of hope to fear to hope. We don't see it getting done, or a very low probability of it getting done before the election. And then that kind of brings into question before the end of the year. So that could definitely exacerbate this type of kind of K-shaped divergence that we're seeing. If there is a change in regime, we tend to see an increase in volatility as well. And so then you add to that the potential that people could be anticipating a higher tax regime. Could that create some selling going into year end? Absolutely. The implied volatility, kind of the term structure of volatility, is still, even though it's come down over the past week, that kink that we're seeing that remains pretty strong in November, December is telling us exactly that. So we're expecting volatility going into the end of the year, but on 2021, we're actually very constructive in terms of people putting capital to work.
Help me understand the trade around that story at the moment, Kristen.
Sure. So like the trade right now that I particularly like. So just looking at going into the end of the year, it's really hard to think about how do I put capital to work with this uncertainty, with this pending volatility? Does it make sense to actually invest now? So we prefer selling volatility going into year end and actually using that as a way of building positions at a discount. I've talked about this before on the program where you can kind of take advantage of that kink, that spike in volatility that we're seeing in November, December, and get paid some pretty handsome yields to basically build positions at a discount. In terms of how we should think, kind of that system two thinking that I was discussing going into 2021, then it's about really thinking about what's dominated the market in this year, those COVID defensive industries, tech, e-commerce, all of the ones that have had that substantial tailwind this year versus the industries that have actually had the headwinds, the COVID cyclicals, and understanding that our base case in 2021, that ultimately this is a health crisis. And once we get resolution on the health front, that's where we're going to see the opportunities to kind of rotate and see benefit within these COVID cyclicals. And that's a combination of vaccines, it's a combination of treatments, more prolific and quicker testing, and also the fact that the data is telling us right now that the virus seems to be less lethal, which is a positive sign, but we're following that data very closely.
So, Kristen, short term, fade elevated volatility into year end, use it as an opportunity to raise income, put that capital to work over the long term in the more cyclical parts of this market. How do you hedge that view?
So on the hedging side, look, for everyone, there's really kind of two different positionings right now. And I think sometimes when we're having these conversations, we tend to think that everyone's positioned in the exact same way, when quite honestly, you basically have some bifurcation in terms of people and investors who've been substantially overweight cash, and then people who have been fully invested in risk assets. So how do we hedge that view? Well, if you're someone who's been overweight cash, then you're benefiting from taking advantage of some of this volatility and building these positions and legging into the market, or for finding opportunities in some of these areas such as dividend growers on a global basis. So global companies that have very strong balance sheets that are also paying you in terms of the dividend yield. If you're someone who's been fully invested in risk assets, then that's a little bit different. And the question there is, do you take those chips off the table or do you hedge going into year end? Now that we've seen volatility come back a little bit, we don't want people to buy protection all the way down to zero, but what you can do is kind of buy spreads that give you a buffered area of protection. So you're not paying for protection all the way down to zero. You have a range of protection such that if you do see a little bit of pressure into year end, then you're protected against that, but you're staying invested when we anticipate that capital will be put to work in 2021.
Kristen, love catching up with you and looking forward to catching up again to see how this trade goes. Kristen Bidley there of Citi Private Bank. In this market right now, 11 minutes into the session, the S&P 500 up nicely, the Nasdaq up more so, and a market desk back with us. Here's Abigail.
Well, John, let's start out with that outperformance for the Nasdaq, because one piece of it, Facebook. This is investors on this Monday are really bidding up big tech, the mega caps, the giant internet companies. Facebook, a piece of this on that risk-on mood, nuanced risk-on mood, I should say, because of course it is this year's defense, but these companies really outperforming. So we do have Deutsche Bank raising their price target on Facebook to $325 per share. Plus, Jefferies is incrementally more positive after ad week. Levi Strauss is also higher by about 5%. This as Morgan Stanley has raised its rating to overweight on potential margin growth. The real winner, though, this morning, look at Dillard's absolutely soaring up 22% on the news that all investors and companies want to hear, which is that Berkshire Hathaway has taken a pretty sizable stake, 6%. Deputy to Warren Buffett, Ted Weschler, has become the third largest equity holder in Dillard, so that stock soaring, the best day since April. And then finally, Snowflake up more than 100% from its IPO last month, up 3% today, as they have recently signed Goldman Sachs and in their push, John, to gain banking clients.
Abigail, thank you. Thank you very much. Coming up on this program, European nations preparing tougher restrictions to contain the coronavirus. That conversation coming up next with PGIM's Greg Peters with record low yields on 10-year and 30-year Italian debt. That's next. This is Bloomberg.
Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Minutes into the session, your equity market shaping up as follows on the S&P 500. We advance your outperformance coming off the back of the NASDAQ. Big tech up around about 150, up by 1.27%. The S&P up 0.7%. Elsewhere, a cluster of new virus cases snapping China's streak of more than 2 months without local transmission, underscoring the risk of resurgence as infections reach a tipping point in Europe. Countries from Spain to Ukraine posting record increases, with leaders struggling to devise new restrictions amid a fragile economy. Bloomberg's Guy Johnson joins us now for more. Guy, you just have to compare and contrast the approach in China. An outburst, a cluster of 12 infections, and they throw 9.5 million tests at it over the next 5 days. And in the UK, not to be snarky, what are we talking about doing? Closing the pubs.
Yeah. And we're not closing all the pubs. So a little later on, 3:30 p.m. London time, Boris Johnson's going to be in the House of Commons. He's going to be laying out this tiered system